please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Now, Adani Green Energy, that listing has taken place. It'll come up for you. It's down about 3% on the National Stock Exchange, but it's up 5% on the Bombay Stock Exchange. By the way, it was expected to be, this range of 25 to 30, the listing, so it's come in within that range. Adani Green is now the first independent standalone renewable power player to get listed on the bourses. And, the company has indicated that their portfolio of assets, the total capacity is 3.1 gigawatts. They plan to take it all the way to 10 gigawatts by 2022. So that's Adani Green. Okay, it's looking pretty good. It's sort of up in the green on one exchange and down in the red on the other. But for the market itself, it's flattened out now. So the selling pressure has gotten arrested. ICICI Bank, that is the lone ranger on the top, up almost about 2.5%. Tata Motors is also picking up pace now after the big gains last week. Tata Motors is up about 1% ahead of its JLR Analyst Day that takes place this Friday. But Manisha Gupta is with us. She'll give us a quick roundup of all the action in the commodity space this morning. Hi Manisha, welcome back.
Thank you so much for that, Sonia. Let's start with the crude oil prices because that is where the maximum pressure continues to be. We did see nearly 3% decline on Friday, and you are down nearly 1.5% to 2% for both the crude varieties. Well, if you look at the prices, the US crude is trading at a 2-month low. The Brent is trading at a 1-month lows as well. And this is ahead of the OPEC meeting in Vienna on this Friday itself. While you have seen hints from Saudi Arabia and Russia that they are looking to increase supplies, but the other OPEC members do not like this. And there already is a discord within OPEC members even before that meeting has started. And apart from that, you also are looking at other geopolitical concerns in the Middle East. So all of that put together, there is a lot of uncertainty when it comes to this sector. The Indian prices on your screens have also opened 2% on the weaker side. Just to give you a number, we are down by nearly 11% for the crude oil prices from the highs that we saw in the month of May. So quite a bit of a decline is what we have continued to see in this space. The gold and silver prices have been quite choppy as well. And while we did see some buying on Friday, we are trading on the lower side of the range. Some more pressure coming in on for this one. That is because there is strength in US dollar, and we have seen some decline for many of the commodity currencies and the high-yielding currencies as well. And that continues to weigh onto that space. Silver prices actually had declined 3% on MCX on Friday, and we are seeing some more pressure come in, especially onto that one. It is the same case when you look at the base metal space as well. The pressure in that also has continued. After nearly 2 to 4% of decline in the previous week, you are looking at very sharp cuts, especially continue in case of copper. That one is trading at around 2-week lows. We have aluminum prices trading at a 2-month lows right now on your screens. And because of the fact that the Chinese markets are shut today, you don't really have much of cues coming in sense of the ferrous and the non-ferrous trades there. You are looking at further pressure in the steel ingredients like nickel and zinc as well. Zinc fell 3.5% on Friday, another 0.5% of a cut coming in. That pretty much is the case there. You have seen Chinese data on the weaker side. The retaliation between US and China doesn't augur well as well. And apart from that, there has been increase in inventories for most of those metals on the warehouses. So that's yet another reason for you to short those metals for the day today. Trading strategies, we have them from KDR Commodities. They have a sell call as expected in case of crude oil prices. 4360 is the target on that one. But they have a buy on energy products. For natural gas, they expect the prices to gain up to 208 for the day today.
Welcome back. As promised, let's get a conversation going with the top management at United Breweries. We have Shekhar Ramamurthy joining in. United Breweries, the stock has been on a tear. It's very close to its 52-week highs. So is FY19 going to be as good as the previous year? Shekhar, great to have you on the show as always. It's interesting times because in our last conversations, you've indicated that there is going to be an increasing thrust on premiumization. So I want to know how that's progressing. And also Maharashtra and a couple of the issues that you had which were impacting volumes earlier. Is that absolutely firmly behind the company now?
Good morning. On a broader macro note, yes, the industry is showing growth now, and this is what we've been maintaining over the last 1 year. The growth will come back, and we will see mid-single-digit growth, which is what is happening. However, states of Maharashtra and Bengal haven't turned around. We had again spoken about the issues we had with Maharashtra government last year, where they had increased tax to very high level. Whilst they did moderate it, but prices have gone up quite steeply and the industry continuing to show a decline. And that is despite the fact that last year we had the impact of the highway ban. So one of the reasons why Q1 is showing, at least for the moment, April and May showing decent growth is because last year the comparators were low. But Bengal continues to be in a steep decline because, again, you'd recall the government put up the prices very sharply and the market is down. We are still talking to the government because this is a dialogue which we have started with them to say that, that industry will decline, and after a few months of observation, they should take some action which will be win-win for both government and the industry. So we are still in the process of that. But apart from that, we are seeing decent growth. Karnataka is showing modest growth. UP is showing decent growth. Orissa is showing a growth. Most other markets, Rajasthan is showing a growth. Most other markets are showing a growth. So I think overall, this financial year, there should be a growth in the industry. We're just hopeful and more than hopeful, hoping that large states of Maharashtra will also turn around.
Okay, Shekhar, hi, good morning. In fact, when we spoke with you last, you indicated about a 6 to 7% growth for the industry this year. Given that you're an organized player, as well as next year is election year, and generally during election year, the spending goes up for organized players, do you think you can do at least double-digit growth this year and next?
I can't say that there will be double-digit growth. We still believe that the industry will grow 6-7% for the year, because there will be pockets of growth, and as I explained, there will be pockets of decline. And as far as United Breweries is concerned, we always are hopeful and that we have plans in place to grow ahead of the market. So the industry grows 6-7%, we are reasonably confident we'll grow ahead of that. But to commit to a double-digit growth for this year and next year will be difficult.
Okay, fair enough. Won't press you on that then, Shekhar. Let's talk about the margin profile that we can expect this year. And I come back to that point on premiumization. Correct me if I'm wrong, but I believe premium brands right now contribute to about, what, 20% of your portfolio? How should that number move this year? And then what does that mean for margins?
This whole concept premiumization in our business needs to be looked at in two ways. And one is that you must have brands which the consumer is willing to pay a little bit more for by giving more value. Two, in our business, different states give us different margins because of the duty structures being different. States give us different margins because of the duty structures being different. So it's important for us not only to have premium brands in the portfolio, but also to have strong shares in the higher margin states. And the key reason why UBL is ahead of the competitors in profitability is that we have a healthy combination of the two. As far as we are concerned, to our overall business, our premium brand contribution is growing quite significantly. Ultra is growing very rapidly, very strong, double-digit, 30-40%. Heineken is growing 30-40%. We have introduced Kingfisher Storm last year, which is being rolled out across the country, and the response is very positive. As you know, we recently launched Amstel as a strong beer, initially in Karnataka, and we'll roll it out across the country. So our portfolio of brands will keep increasing because we genuinely believe that as industry grows, as consumers get more informed, there will be a greater choice towards repertoire. Yeah. People won't consume just one brand, and not just in our business. You look around any other category, people want variety, people want choice. So we will definitely cater to that.
In fact, we have spoken about that, Shekhar, we have spoken about that in the past, right? As to how you're getting hit in terms of competition from both sides. One in the niche market from the likes of Bira, the other one in the mainstream market from the likes of Carlsberg. You did indicate to us that you're looking to sort of launch your own range of craft beers very soon. But any kind of timeline, any progress that you've made on that front?
Yeah, we're making good progress. It's all internal right now. We are targeting to introduce our range of craft beers by the end of this financial year, so that we too will have our own presence there. It's too early for me to say what they will be, but definitely the market will get craft and variety brands of UBL to make the consumers more excited.
Shekhar, you didn't answer my question entirely. I'm going to try my luck again. So yes, as the premium brands grow, and they're growing so well, you gave us some of those numbers, margins which were at what, we're talking 16% at the end of last year. Can you, go better than even that?
That's always our objective. Like I said, it all depends on the state mix, you know. And at this point of time, it's looking good. It's looking good. We are cautiously optimistic that we shall be able to maintain that margin into this financial year. Whether we can improve upon that depends, like I said, on states like Maharashtra and Bengal turning around. Once they also go back into growth path, maybe it will improve.
Okay, well, 3 cheers to your success and all the best for the quarters to come. Thanks, Shekhar, as always. It's a pleasure speaking with you. You uplift our spirits for sure. But let's move on to CNBC TV18 exclusive. We learned from sources that Indiabulls Housing Finance, the promoter, has sold stake to bring in a large long-term investor. Perhaps that's the reason the stock is, moving quite fast right now. We'll pull up the intraday chart for you. Nimesh is here. He's been tracking that story very closely. Nimesh, any idea on who this long-term investor is?
Hi, Sonia. So, what I understand from sources that the 2% stake sale which happened in Indiabulls from the promoters was largely to bring in a US-based hedge fund called Lone Pine. It's a large fund, manages several $1 billion of money, and they are the likely buyers of the 2% stake from the promoters. Given that the name was not mentioned in the buyer's name was not mentioned in the block deal, it led to a bit of a confusion as to why the promoters have sold and raised 1,000 crores. But I do understand from sources that this essentially was done to bring in a very large US-based hedge fund. In fact, this is a fund which also owns into HDFC Bank. So, this particular fund, I'm told, is a large buyer into the Indian financial companies, and probably that's the reason why they bought into Indiabulls Housing as well. So, again, it's all source-based, no confirmation from the management or from the promoters, but it's quite quite likely that the 2% that was sold by the promoters is bought by this US-based fund, essentially to increase the holding or to get an access into Indiabulls Housing Finance as one of the additional stock which they've added apart from HDFC Bank.
All right, Nimesh, thanks very much for that. That's a stock on the move today at 1,200 back on Indiabulls Housing Finance. We need to take a very quick break on that note, but when we come back, don't go away because we have another very special conversation lined up.
Hi, welcome back. The 2,000 crore Reliance Pharma fund has managed to beat its benchmark, even though the worst of the pharma cycle is there. Is there more upside in the sector, and which are the winners of the future? We asked the man behind the Reliance Pharma fund, Sailesh Rajbhan, who joins in. Sailesh, hi, good morning, and thanks for joining us on CNBC TV18. I was going through your pharma fund, which of course is doing very well now that the stocks have picked up. But it's been a very painful journey for investors with these stocks, names like Sun Pharma, Dr. Reddy's, etc. Most of them plagued with US FDA issues, pricing pressures. You think the worst of that story is now behind us?
Like you said, last 3 years have been very difficult for US-focused pharma businesses. And I think there is no negative news which is not yet played out. In fact, you have seen a whole host of negative factors impacting earnings of these companies. We think directionally, 3 years of difficult period, plus also now big resolutions on the US FDA side. You're getting plants which were under compliance issues getting corrected, plus also bottoming out of pricing pressure is likely, given that prices now have virtually corrected for 2 years beyond normal. And now we are also getting Indian companies getting new product approvals, important products getting launched in the marketplace. I think the cycle certainly seems to have bottomed out for the US business.
Shailesh, morning. Yeah, I mean, the fund has, even in the worst of the cycles last 2-3 years, the fund has outperformed the sector benchmark. I'm looking at the composition of stocks. I mean, you've got all kinds of companies, Abbott India, Sun Pharma, Divi, Cipla, Aurobindo, Biocon. So it's a generous mix of, large US-facing pharma and mid-cap companies. Going forward from here, what are you most convinced on? Where will maximum money be made in which kind of pharma companies?
See, it is interesting. In the last 3 years, like I mentioned, the US didn't do well. You also had Indian companies suffering because of the implementation of GST, which impacted some business last year. So a low base has been created for that particular segment of the market as well. If you look at the US market, like I mentioned, the earnings recovery seems to be starting off, so it could well be a good cycle over the next 3 years. Even on the domestic side, which is actually a real long-term consumer story, where you would see that, unfortunately, India has among the largest populations of cardiac, diabetes, and thyroid in India. And that particular large base requires solutions from pharmaceutical companies. And I think given the increase in diagnostics and several other increasing per capita income, we are finding that the domestic market also continues to compound and present a good opportunity. Both these markets now have a positive tailwind supporting them, plus the longer-term competitiveness of Indian companies, which is well established. Indian companies sell products in over more than 100 countries globally. So I think both these segments of the market actually appear interesting. On a valuation basis, because the US side of the business has corrected much more, you could peg it a little bit higher than pure Indian domestic businesses.
But do you think it will be still a very volatile space for long-term investors, Sailesh? I mean, Dr. Reddy's, for example, right? First, they announced the approval of Suboxone, and now this morning we understand that there's been a temporary injunction order. So all of this causes a lot of volatility in these stocks. You think that's something that investors will have to live with?
I think last 3 years have been volatile, to be honest. I mean, this sector has seen very difficult times. We think we are coming out of those difficult phases. Please understand, some of these challenges which keep coming on and off to companies are a part of business. So they are not they are not necessarily, going to impact the whole part of the business, but impact small pockets of the businesses. And as I see, it's more a question of, I think volatility was a function of how deep the losses or fallen profits from US business would go. Now with directionally an uptrend possible, currency supporting these businesses, I think investors will look at the trend towards how faster the earnings will recover over the next 3 years. So in my opinion, the peak of volatility and peak of challenges are actually behind the sector.
Okay, all right, Shailesh, we'll have to leave it on that note. Thanks very much for joining in, giving us your take on Pharma, one of the bigger pharma funds around out there, 2,000 crores in assets under management. Well, on that note, we will have to wrap up this edition of Bazaar. Markets very volatile in a tight range, now fighting back to the flat line. All the action continues with Chartbusters up next.